Good morning, good morning, good morning, traders. Can you see my screen? Should be on the data, just to confirm. Okay, thanks, Gavin. Yeah, today I'll be driving solo. Ryan is off for a few days on holiday, and I think Stelios has some family business to take care of. So, good morning. Let's have a cracking show, and let's kick off straight away. In the overnight news, well, just for a starter, there's not that much to say today. Starting over in China, though, there's this ping pong is starting between the US and the Chinese officials over that tech investment executive order that Biden threw in yesterday. And the Chinese, of course, are not happy about those investment restrictions. And they're of course letting everybody know. It didn't move the markets much, but it's something that we have to keep an eye on how this develops and how hard they're going to fight with each other over this, especially that our friend here, the UK Prime Minister Sunak, indicated that he is planning to perhaps follow US lead on those tech investment curbs into China. So this is a story that could unfold and probably will be an additional weight on the Chinese yuan's shoulders if the foreign investors can't really invest too much into China. At the same time, the PBOC is still fighting very hard against those moves right now because with their special instruments that they have, they are fixing the Chinese yuan, the local one, the onshore one. They are fixing it in the 715s, where the models are showing that they rather should be fixing it around 720. So they are still pretty much there to say, like, don't go and sell too many yuan right now because we are keeping an eye on you guys. That for China. Then in the other better news that we can say is that China is and they've advised the countries that will benefit from it. They advised them already that they are lifting group travel bans into Japan, US, UK, South Korea, and a couple of other countries. That's important. Yesterday, we heard already about the Japanese press that may happen. We have to know that the Chinese group travel during periods like Golden Week or Obon holidays are really a very big retail sales booster for Japan. Of course, Chinese visitors, they spend a lot everywhere, but especially for the Japanese economy, that can over time mean that during those special weeks and those special travel flights and stuff, they will pick up quite a bit of positiveness from this. We wouldn't find it back in the yen moves overnight. Because there's a few things going on, and I'll show the euro yen a bit later as well. The yen crosses are very big again. Yesterday, I already indicated that the JGB yields are actually coming off and below 60 pp's again. They're holding below 60 pp's. It was a good Toby day today as well, but the dollar yen is holding very firm, and that's mainly driven by yen crosses and the effect of the Bank of Japan being so slow to let the market go higher in the yields. What's next? Australia's consumer inflation expectations are coming off a little. They're getting back below 5%, where the prior reading was 5.2. They are now at 4.9%. The currencies are a bit listless right now, going into the US CPI, of course, which I will touch upon later. It's that's really what everybody is expecting right now, and the currency should perhaps move around a little bit, but but pretty stable in the end into the US CPI. That for that, what else? Yeah, staying in Japan, it seems that Kishida wants to revamp his cabinet a little bit, and that may happen around September. But since the LDP is really the only ruler in Japan, I don't expect it to create big waves. We just have to see if he's going to be brave or crazy enough to replace some of those big economic guys like Matsuno or Suzuki. But I would think that those two may remain in place, and it's going to be smaller fish that will get out of the ocean and another one put in there. Right, and I think that is about what I have on the overnight news. There was this Reuters poll out yesterday, and then Bloomberg picked up on it again a bit later, saying that strategists and on the sell side, so that is banks and other providers, strategists are starting to look at the 10-year yield coming down. They think that we may have seen the peak, and that would actually give Stelios a lot of credit, because he thinks that we have peaked as well in rates and we are going to go gradually lower. So they think we have peaked in the 10s. That was mainly the part that they were talking about, and that we may see a gradual move down to 360% towards the end of this year. So that's an interesting take, especially that the Treasury is increasing their bond issuances, but those people think that there's enough in liquidity and in the RRP and in the money market funds to absorb a lot of that supply in the bond market by the Treasury. So those trades think, and there's about, I think it's about 70 or 80% or so of those strategies who think that the US 10-year yield is at the top or seen the peak, and that we are going back down now. Over to a bit of data that we had, and we need to mention, of course, the oils that came out yesterday. We had a build, a bigger build than expected. That was in line with the API showed before, but it didn't have any impact on oil at all. We'll have a look at oil because it's really breaking out of the range, and it seems that Saudi Arabia and their OPEC buddies have succeeded in cutting supply enough for the market to go a little bit in panic mode and take oils higher. We'll have a look at that. For the rest, there was not much out. A bit of Canadian building permits better than expected, where the Canadian dollar is only half benefiting from those kind of things. We have the combination of this Mexican CPI and tonight Banxico. CPI is trickling lower, tad higher on the month than past month, but not really anywhere alarming, because the year-on-year numbers are still coming off. You know, we are 0.3% below the last month's read. So tonight Banxico up. I'll have a look at the mix. Overnight, a few numbers. Yeah, PPI is slowing down in Japan, but it's all like very, very slow going. We know that PPI is more volatile than the CPI could be. It is coming off, so that is going in the way of what Ueda is thinking, that CPI is coming off in the second half of their fiscal year. So he seems to be on the right side of things, and it also probably weighed on the yen overnight. Further down, we've had here you see those Aussie inflation expectations. We had a bit of Swedish data, nothing much to write home about, although the data in Sweden continues to be weak. I haven't been trading the stocky for a long while, but it is, if not alarming, at least a bit worrisome for the Riksbank, and they've already indicated that. So we'll maybe start to have a look at the stocky, because it's not behaving too well right now. Norwegian krona CPI coming off, and the result is that Euro NOK especially is a bit higher, rose about 0.5%, despite higher oil and gas. The Euro NOK rose about 0.5%, which keeps the dollar NOK rather in a range right now. But if this is confirmed, because they're coming off from lofty levels as well, if this is confirmed, it could keep the Norwegian kroner in check. Final July readings for the Italian CPI, just a tick lower. Still, I would say a bit stubborn over here. I don't think there's going to change anything for what's happening in Europe and what the ECB is thinking. Speaking about the ECB, the economic bulletin came out pretty much as we heard over the past, the latest ECB meeting. They see risks, downside risks to the short-term economic outlook, but at the same time continue the fight against inflation. So that's pretty much what we heard from Lagarde on the last ECB meeting. And that is about it. So looking ahead, we still have a bit of CPI data coming out. But then the main one, of course, is going to be here, the US CPI readings today. Just give me a sec. Right, those CPI readings. So we are expecting a little bit of a bounce on the month-on-month here, from 3 to 3.3%, with a 0.2% reading on the month-on-month. But the core, well, here it says it's expected to hold, but most of the expectations are it to come off 0.1% to 4.7. So we could be in a situation where the headline picks up a little bit, but the core continues to come off. We all know that the core and then the PCE are the main ones that the Fed is watching. So get this little tick up here from 3 to 3.3%. I would not expect it to have a major impact on the dollar today. If the core remains sticky, that could send the yields perhaps a little bit higher again. But if we come in as expected, I may think that we don't deviate too much from what we have seen in the past sessions, and that is pretty much the dollar being strong versus some, but then the euro being like a bit of a copy paste of the dollar. I'm going to look at the currencies because there's a few interesting developments going on there. And then later today, as I already said, we have the Banxico decision. Now, they've already indicated on the last meeting that they were not looking to go much further in the interest rates hikes, that they would be happy with a pause, even if the Fed would increase their own. So the market is firmly expecting a pause here. But if they have seen those CPI numbers come out, and they are happy with those, where are they here? They are happy with those numbers getting in on the headline back below 5%, and the core slowing down as well. There is this outright chance that they may actually cut a quarter or so, just to show the market that they are proactive, and that may initially scare the carry traders a little bit and put some pressure on the mix if they would do. I'm not saying they will do. The base case is for them to hold their interest rates still, but there is this chance or risk, depending how you call it, whatever your position is in the Mexico, if you have one, that they may show something to the market and cut 0.25%. Don't forget that Banco do Brasil lowered its interest rates. They are not really in the exact same position as the Mexico lads, because Mexico, as we know, has much more interest by the investors, being also the US manufacturer. The impact on the mix may be not the same as we have seen on the real, and at the end of the day, the currency will still yield 11% if they do like a 0.25% cut. So that is one that we will have to keep an eye on, close eye on tonight. What else? Well, tomorrow morning, for those trading sterling, we will have the GDP readings in the UK here, and that may be a mover for the sterling. We've seen sterling move a little bit up and down, bit of a yo-yo of late, and the market is, I think, looking for reasons to sell sterling again. As you know, I've been pretty positive sterling for quite a while, but it looks as if this week is one where the investors are really waiting, perhaps for this one. The industrial production is also coming out, for this one to show. And they are either in the waiting chamber to take sterling up a notch again if those GDP numbers beat. But if we really get those flat readings, I'm starting to change. I will change my opinion on sterling, perhaps, if those numbers come out weaker. Alrighty, let's look at some charts, shall we? If you guys have any questions at all, just put them in our chat box. Something that you want me to look at. Where is my? There. We're going to look at a few prices. If you want to look at something in particular, just put it in there. Okay. I'm going to cover the majors, and then we'll see where we are. Right, euro dollar broken above this small intraday, small trend line. Yesterday on face, I told you it looks as if the low 109s is going to be a tough nut to crack. It proved to be the case, and we are back above 110 in the euro dollar, and relatively comfortably so, I would say, running into that US CPI. I'm still off. My base idea is still for euro dollar to be in some kind of range where the euro and the dollar tend to run together in some way. But and I also think a part of this is one is people squaring up positions. Those good few people were short euro dollar. Perhaps they've been they've taken some back of it, and other people actually in our room successfully bought those bottoms and have taken some decent profit on the way back up. So that's how you trade ranges, and I expect the broader range to remain intact unless we have big deviations of those US CPI data. But, and I will show a couple of them, if you look at euro crosses, my main idea is that if we get a beat of CPI and we get a quick move back down to those mid to low 109s, I would say that they would still have a chance to hold again, and just looking at the price action of what happened and looking at the euro crosses. You always have the dollar pair, but always have a look at the crosses to see whether one of your currencies in the pair is stronger rather than the other. And in this case, despite what we've seen on the European data of late, in this case, the euro is holding pretty well. So that brings me to say that if we would have a slower than expected CPI or lower than expected CPI reading this afternoon, sticking at 3% on the headline, perhaps on the year-on-year instead of the 3.3 expected, and have like another just a tick, perhaps lower on the core down to 4.6 will be enough. I think will be enough for us to at least retest the 110.5. But I think the risk for now, the risk is there that this ticks higher. And I'm saying that also because crosses are higher. And if you look at this one in particular, euro yen broken through the prior tops. We had 1, 2, 3 tops at 158, and we're above. This is one measure. We could argue it's a measure of weakness of the yen. I agree. But this is also a measure of strength of the euro. So we have a bit of extension in the 159s. But if you look at, if you look at the weekly, you know, I've been banging on about this 155 level in the euro yen. We've had this big setback the other week, where the yen really went very strong because of the expectations of the Bank of Japan, etc., etc. And then since then, it fiercely rebounded. We also had, if you look at the weekly, we also had a retest of it, and we bounced off again. So here the weekly is rather telling me that we are looking at 160, or if worse comes to worse for the yen, look at this, the big move down from the 1980s to 2000. The 38.2 comes in at 164, call it. So am I saying it's going up to 164? You know, I'm still not a very big fan of the yen. So I'd say there is this chance for as long as it holds on a weekly close above 155. And that brings us to the dollar yen, which I think, so we have this break here and this break here, and the prior top as well, which we, why is this over here? Yeah, no, that should have been here, right? Oh, I see why. So we had a bit of a break above here as well. We went into the 144 zone. Just a quick look at the cloud, the top of the cloud, and you know the Japanese are watching this. The top of the cloud today, 142.87, and I think that on today's CPI is important enough that if it's weak, we could go and retest that. Therefore, dollar yen should go back below 143. You know, I spoke about this zone, yeah, 143, 40.90, gateway to 145. If it goes back below 143.40 today, then I think we are in for a test of that top of the daily cloud. And why not move back into it if it's weak enough? Because if it's weak enough, the US yields are going to come off, and that is typically a driver for the dollar yen, as we know. So we could actually have this move back into the 142s. Why not low 142s the yen? Although stabilizing a little bit, is still volatile enough to me to create those 150 points moves. Now, on the other hand, if we get sticky inflation in the US this afternoon, this one to me is one which is vulnerable for a move higher, and I could easily see a retest of 145 if the US CPI is sticky enough. You know, it's the high here, low here, low here, and then we had the big decline last year. On that was we had some interventions for one, but also a weaker US CPI reading, which pushed ultimately dollar yen down. So if we ever get up there, the 145 is an important level, okay? Very important. And I'd say it's Thursday. I think we have to look at the close of the week. If you close the week above or below 145, that may be telling. And if the US CPI is sticky, I think we're in for a decent test there. Cable, as I said, I think that's an open question for me, and it's going to be 128 or 126.80 on this afternoon CPI. In between there's very little to say about cable. That's going to be a follower of fashion, I think. And if you look at the way euro sterling is behaving and the way things like sterling Aussie, for instance, have quieted down a bit. Sterling yen is a different animal because the yen is weakened. But if you look at that, I'm starting. Well, I'm a lot more neutral than I was before on sterling. Let's put it that way. And if we get a strong CPI out of the US, I would not be surprised if we test that 126. Okay, 126.80. I really wouldn't be surprised about it, because this one is starting to bounce, right? We had this bounce, we had this bounce early July. Okay, we had a lesser bounce here, but we put in a higher low, this thing, I think we could go for a test of this 86.60, perhaps 86.80 in the not too distant future, if the euro keeps the bid that it has right now. It's a bit of a mystery for me as well why the euro is really big, because the data are not really strong, but I reckon the market is trading this thing about ECB may continue a bit longer with the rate hikes than other G7 also peers, and that is likely keeping the euro bid here. But anyway, yeah, this is the way it looks to me now. We need to get under 85.90 at least to test lower again. But as I said, I'm relatively neutral, but my bias may be changing a little bit on the sterling. Right, Aussie, Kiwi. I think the Aussie is weak but neutral here in the short term going into the CPI. Get a weak CPI, I wouldn't exclude a quick look at 66 if it's weak enough, that US CPI, and driving the US yields lower. If in turn we get a sticky one, looking at how the Aussie is behaving lately and on the back of the weaker CNH as well, I'd say a sticky CPI in this case will be a faster mover to the downside. So this Aussie looks a little bit like, how shall I say, like the yen, CNH. I think it's the possibility of it to accelerate at the downside are perhaps a bit stronger than really breaking up and going up there. But that's yeah, so different approach for different currencies when we look at those dollar pairs. And it's always good to have one. If you look at the euro, for instance, it's relatively strong versus a lot of currencies. So that's probably going to be more vulnerable for a topside move. If you look at stuff like yen, Aussie, Kiwi, perhaps, because the Kiwi is the Kiwi is now a proxy really again of the Aussie, because Aussie Kiwi is turning around 108 without moving too much. Those are kind of currencies that may perhaps be more vulnerable to the downside still, seeing the latest price action. So for the Kiwi, I'd be looking at this. I don't see much before 61.35.50. But that's going to be a tough nut to crack again on the top side. If it goes, then it's really that the US CPIs are very weak, and the dollar is really getting a knock on the head in a big fashion. But get a sticky one. That may again put pressure on this 60 and 59.85. If it would go below, then there's a bit of room down to 59, 58, 60s. So this one could be a mover as well. And why am I saying this? Is because there is less liquidity in the Kiwi than there is in, for instance, even the Aussie dollar. There's more liquidity in the Aussie dollar than in the Kiwi, and especially in stuff like euro dollar, for instance. There's less liquidity in those pairs. So the scope for a bigger move is higher here too. Yeah, I'll have a look at sterling Aussie, euro Aussie. Okay, So this dollar CAD I wanted to show quickly. Yeah. So we tested 135, and then finally the market started to take notice of what's going on in oil. It's really defied the laws of gravity, this dollar CAD. The market was very negative CAD for a good while. We had the setback from 135. We went a bit lower, then we retested this trend line here at 134.5, and that was enough as well. We are trading 134 the figure. Look, for moves of the amplitude that we had in gas and oil, Canadian dollar is really still on the overall, I speak, on the defensive, right? We need to break back below 133.45.50 here to start moving lower again and for the market to turn around. If after this afternoon's numbers we are holding 33.75, 33.45, I don't know, that area perhaps, then there's probably scope for a retest. If you fly again through 134.5, then I think there's a fair chance that we are going for this traffic zone here, 135.15.65. That is one where I think if ever dollar CAD makes it up there, that's decision time. Because there's, you see the traffic, right? Up, high, lows, high, lows, high, lows, bounce levels, break levels. So this area here is going to be important for me. That for that, right? Let's look at some of the crosses that you think. Sterling Aussie, well, I'm out. Oops, no, that's S&P. Well, just a quick one on this S&P because it's going to be a mover this afternoon too, right? I think your levels are pretty clear. It's 45, 50, 60, 44, 50, 60, 45, 40, 45 top side. Break outside of that, I think then we accelerate. Either side, you know, either side. For as long as we're in the range, ping pong, and trade the range. Sometimes trading ranges can make more money than trying to trade breaks. Yeah, Sterling Aussie, we have overshot that wedge trend line, but failed, and we are turning around this level here, 194.70, but the main level here will be now closest to home is 194. If we start to go back below 94, then the picture may change a little bit. If we start to go back below 93.30.40, then I think that puts risk to the overall party, and we could see a move back down to low 190s. For as long as 190s doesn't break, I think the overall picture still remains the same. The longer term picture remains the same, but we have to pay attention to where we are close of the week again. I think if we start to tackle those levels again, then I think we're on our way to 197s, which is the longer term trend line coming in there. But overall, not much changed. Shorter term, a little bit of caution, I would say, for this Sterling Aussie, and that's where I am at least for now as well. Okay, you were saying about the Euro Aussie, right? Yeah, Euro Aussie as well. Huh? We're breaking above those prior highs here. We're still firmly on an up move. This could be 170. Why not? I mean, if we break again above 168.25, we are rejecting it a little bit right now, as the market is cutting back on positions before the US CPI. But if we get a close above 167.90, 168.25 tonight, 170, right, is probably going to be your target. If we start to fail again, then in turn we could be in for a deeper decline. So I would say 167.90, 168.25, above or below, is likely going to be decisive for the next move up or down in the Euro Aussie. I don't have anything in there, Horatio, but I'm just looking at this level. It's interesting enough to keep an eye on, right? What do I see? Do I see anything in the longer term? Yeah, the longer term as well, it's 170.5, and that's relatively where the target of this move could be. So that for the more medium term, and in the shorter term, I would say same thing as the sterling Aussie. Pay attention to where the close will be. All right. Okay, we need to have a look at oil, right? We need to have a look at oil, and it's broken up. It's broken up in some style as well. We're trading 84.25. Next level to me is somewhere around 86.5 to 88. Seen some decent traffic up there as well. But for as long as we hold 83.5, this is undeniably looking like it wants to go higher now. We've seen in the past some of those moves, yeah. We've had those gaps here. Remember, that was like people cutting supply as well, and a bit of surprise moves there. And we have seen this peter out and move back down afterwards. I'd say if you start to go below 82.5, then we'll probably be in a similar move as we had here and come back down. But for as long as we are not below this level again, I'm not going to fight it. Do I think oil can go a lot higher? Perhaps. It also depends on the dollar, if the dollar starts to go materially lower versus other instruments, it could. It's an open question. I'm just going to monitor this as it is right there. We had the break. For as long as the break is alive, it can go higher. Why not back into the 90s? But do I see a real supply shock? I'm not so sure, unless China manages to reopen in a big way. Then probably all your commodities and energy will shoot up. Okay, but that's still far from certain. Yeah, gold and silver are not looking great, I must say. They are not looking great. I think we're turning around here, that support line, but breaking under 22.25 is not a good sign. Is not a good sign for me. So we are going to need lower yields and a lower CPI print this afternoon for the metals to start to rebound. But if not, and this is looking like 1890, 1900 being well possible for gold, especially if we get a stubborn one. This could actually, yeah, why not have a look lower? Look at the what is there? 200 DMA is also around 1900. So the market is going to scrutinize this, right? If we come for the close of the day. So the close of the day is going to be important. Silver is equally looking a bit ish. It's still trading around here. So one could argue that if the CPI is weak enough, we could see a bounce, but I wouldn't bet my house on it that this is really going to fly. We need to get above 30, 23, 30, 35 to take off again. And I think the mix, of course, Banxico tonight. Banxico 17, 23, 25. That's your nearest range on the mix. And then we have this we're still long term, we're still very, very bearish, okay? Long term. But that doesn't mean that there can be spikes. So on a stronger CPI, more dovish Banxico, this could retest, and why not retest the 1740? It's an emerging market currency. That thing can move 2-3% in a day. We have seen that before easily. This is your big break level. If that breaks, then perhaps there is a medium-term case for it to go retest 18. Okay, that is if we break 1740.45. That is your close that you want to monitor very, very sharp. 17 is your first handle on the downside. And I'd say that's enough, you know, 0.5%, it can easily be done for an extra confirmation below 1690. I think then that would require a CPI which is holding pretty much still, or even showing us a price decline versus expectations, and a Banxico that keeps the rates unchanged and says like, no, we are going to stick here for a good while. We are not planning to cut any rates. Then I think there's a case for this to go and revisit the prior lows in the 60s. Okay, the crosses will trade exactly the same, but we have to note that the euro is a bit stronger. So this one on a Banxico, which is defensive, could actually go and retest those levels here. I'd say 1892 is a bit close to home, but it is a pretty longer term trend line which has breached here, and we are hopping along this trend line. Okay, 1693, 1915. If it goes through 1915, then we're off to the races, I think. If in turn we close below 1870 today or tomorrow, then I think the carry traders will feel more powerful again, and I reckon the Mexican peso will gather more steam again and get stronger. Right, and I think that's us done for today. Trade safely over the CPI. There are a few contradicting expectations. As we know, Stellos is expecting for it not to print much higher. We also see those strategists calling for lower yields. If today the number prints a bit weak or a bit lower than expected, or even close to expectations, but the core ticks lower, I think those strategies and people who are following them may think that they are in the strong position, and so be careful for what you trade in the dollar. If you get a strong one, you've seen my charts and you've seen the currencies which I think would suffer the most. Thanks all very much for being with me today. I'll talk to you again tomorrow to see how you all have done. Stelios will be back again tomorrow as well. So thanks, and Adomani.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.